Can you hear us?
Okay, can you hear me? Can you hear me? Okay.
Talk, we should be able to pop up somewhere on there, I assume.
I just hear you speaking.
We do have a speaking box here. Oh, there we go. That button just got unchecked. So no one else, well, can you see that?
Oh, can you
Well,
see that?
yeah, I was
Yeah,
more-
yours? Nope.
Okay,
Yeah.
well, that's fine. Because you're probably full screened right now. A person in regular WebEx is gonna see this presentation and then have a speaker bar on top.
I can do this.
Yep, that's what we want. Yeah, they'll be able to see that. So we'll have the speaking box. I will turn up, so everything looks good, right? We're both sitting?
Yeah.
Good enough? Okay, so we're gonna go ahead and stop the video for now and Sounds. Hey, Megan, are you in here? Oh, well, she can type, right?
Yeah, she can chat.
All right, welcome everyone. I know we're kind of waiting for some attendees to filter in here last minute. So we are going to keep our microphone muted just for a couple minutes here. Make sure everyone is in before we begin our presentation today. Thank you for being here. Okay, we are going to go ahead and get started here. I want to welcome you all to the CLE presentation put on by the Nebraska Department of Insurance. This will be our third presentation. Thank you all for being here. I know we do have members of the industry, regulators, and attorneys on today's call. Today's presentation is going to be about insurance fraud. We're going to take a look at some issues and some case studies that we've seen through our practice or our regulation of the industry. First of all, I'm going to start off by introducing the presenters, or more accurately, representing or introducing ourselves. My name is Michael Anderson. I've been with the Department of Insurance for just over 2 years now. I'm here as a staff attorney. Previously, I served as an assistant attorney general with the state of Missouri in the Medicaid Fraud Control Unit. And before that, I was an assistant prosecuting attorney in Pemiscot County, Missouri. I graduated from Creighton University in 2011 with my bachelor's degree in business administration and from Creighton University School of Law in 2014. Our other presenter today is going to be Kimberly Church.
Good morning, and thank you for your interest in helping fight against insurance fraud. My name is Kimberly Church. I am the division chief with the Nebraska Department of Insurance, Insurance Fraud Prevention Division. The Insurance Fraud Prevention Division is a criminal division within a regulatory agency. Myself and our investigators are all certified law enforcement officers with a focus solely on investigating suspected insurance fraud. I began my investigation career with the Lincoln Police Department, where I investigated various criminal violations and developed an interest in insurance fraud. And after 7 years, I moved to the civil side of fraud investigation, working with a national insurer in their special investigation unit. And then in 2014, I merged the two careers and came over to the Department of Insurance as a criminal fraud investigator and was promoted in 2020 to fraud division chief. I currently hold professional designations in insurance law, insurance fraud, healthcare fraud investigation, as well as state leadership and project management.
Now, throughout this presentation, you might see some references to the IFPD. I believe that's the
Yep.
Insurance Fraud Prevention Division. Is that
Yes.
correct?
Yes.
Okay. All right. So a couple housekeeping matters before we get started here today. There will be certificates of completion that will be sent out to all of the attendees. That should include all the information that you need to report your attendance at today's webinar. It should include your bar number, the activity number, the day of the presentation, and all those good things. But if you have any questions about that certificate of completion or anything else, please feel free to email our Public Information Officer, AJ Raska. Her email will be available later on in this presentation, and we will touch on that moving forward. Now, today's presentation, we are going to be discussing some cases that we've seen from our side. and giving you guys or giving you all the opportunity to ask questions on a case-by-case basis. So we will be stopping frequently for any questions you may have. There will also be a general question and answer session at the end of today's presentation where you can ask questions about cases that maybe didn't have a chance to get answered today, or if you have questions generally about the Department of Insurance, the fraud division, or the work we do here. I believe we're okay to get started. I can't think of any other housekeeping issues at this point. Okay, all right, so let's go ahead and dive in. And again, thank you all for being here today. So fraud, what is it good for? Absolutely nothing. But music puns aside, before we dive in, I do want to take some time and go over some of the laws and the background, the authority that we find, or more specifically first, I want to talk about the impact that fraud has on the insurance industry on any given year, all the time. Now, according to the Insurance Information Institute, insurance fraud costs the United States consumers at least $80 billion a year, billion with a B. Now, the Coalition Against Insurance Fraud, the CAIF, estimates that workers' compensation costs insurers and employers $30 billion a year. So this is not a minor thing. This is something we really deserve to keep on guard about and move forward and really make sure we can lessen those amounts, or at least do our part to make sure that those harms aren't as realized as they could be, let's say. Now, the Federal Bureau of Investigation reports that non-health insurance accounts for $40 billion of loss a year, and that's only for non-health insurance fraud. Now, this cost translates directly to a cost in premiums over the long term, and this costs the average U.S. family between $400 and $700 a year in premiums. So this is really nothing to scoff at. This is a big issue, and that's really what we do here. We make sure that we have the opportunity to protect those consumers and try to drive those costs down wherever we can. Now, generally, what is insurance fraud? Well, simply put, insurance fraud is the deliberate deception committed against or by an insurance company or agent for the purpose of their own financial gain. Now, since this is in part a continuing legal education seminar, I also want to include some legal definitions. Now, the Insurance Fraud Act can be found in the Nebraska Revised Statutes, specifically sections 44-6601 through 44-6608. Now, this outlines the insurance code violations that can result in civil or criminal actions. An enumerated list of the specific offenses is found in section 44-6604. Now, these offenses are also enumerated in the criminal code in section 28-631. This lays out the potential criminal penalties, as well as, again, rehashing the individual violations that can lead to a charge or an investigation into alleged insurance fraud. Now, most, if not all, states have statutory references to insurance fraud, or certainly at least a fraud statute in general. Now, even the federal government has some insurance fraud statutes. Specifically, those can be found in 18 U.S. Code, section 1033, and this addresses interstate acts of insurance fraud, which include things like materially false statements, conduct of an officer, director, agent, or employee of an insurance company in interstate commerce, and knowingly making false entries of material fact in any book, report, or statement. So now that we've discussed kind of some of the background regulation or the background authority on the state and federal levels, I want to talk about fraud in general. I mean, we know fraud's bad, but what do we do about that? We all agree that fraud does cost money, so how do we fight fraud? Some states may be different, but in Nebraska, we take a several-pronged approach. Now, I do want to highlight that everything we discussed today is mainly going to be at the state level, how we handle things here in Nebraska. Now, that will include potentially some examples of working with sister jurisdictions, other states, or working with the feds on a national level for any number of investigations. But in Nebraska, we do take that several-pronged approach. We have the Fraud Prevention Division. We have the Insurance Complaint Division. We have Market Conduct, and we have the Legal Division. And we are all part of a team that works to make sure that we can prevent fraud, fraudulent acts, and really remove the bad actors from the game of insurance. We are also here to work collaboratively, not only with our sister jurisdictions and the feds, but also with the local companies in our area or any companies that do business in our area. Now, we also collaborate with the National Association of Insurance Commissioners. You may hear them referred to throughout this presentation. That'll be the NAIC. And I have already mentioned the sister and federal jurisdictions. Now, every investigation that we hold, we don't necessarily take the primary slot or the primary prosecutions within the state. We are more than willing to work in a support capacity to assist other jurisdictions in their fraud investigations and things that they are seeing happen in the general market. So we're going to move on from there, and we're going to talk about what our Insurance Fraud Prevention Division does.
The mission of the Insurance Fraud Prevention Division is to confront the problem of insurance fraud in Nebraska through prevention, investigation, and prosecution of fraudulent insurance acts in an effort to reduce premium dollars used to pay fraudulent claims. Some of our duties and responsibilities include conducting independent investigations when the division has cause to believe that insurance fraud has been committed or has been attempted that's in violation of the Nebraska Insurance Fraud Act as specified under the Nebraska Insurance Codes. As Michael mentioned, that's 44-6601 through 44-6608. We also work in cooperation with other law enforcement agencies and prosecuting attorneys to prosecute insurance fraud violations under the Nebraska Criminal Code for Fraudulent Insurance Acts, which is 23-631. In addition, we provide anti-fraud training to the insurance industry, law enforcement agencies, and other civil organizations.
So the Insurance Fraud Prevention Division is just one piece of what we kind of refer to as market oversight. Now, we also utilize investigations by our Insurance Complaint Division and the Market Conduct Division on the civil side. Now, specifically, the complaints that go through the Insurance Complaint Division most often do end up in more cases of administrative action rather than criminal investigations of fraud. But we are going to talk about some examples that did reach to that level. Many of these investigations do start out by a complainant who would contact the department through our Insurance Complaint Division. And the reason they do that is because the department has broad powers over insurance producers and insurers to require them to produce documents and ask questions regarding their conduct. Now, I've kind of included a bit of the statutory authority for requesting those documents. Those can be found through the Insurance Producers Licensing Act, if we're talking about cases of licensure or activities of agents in general. That is found in the Nebraska Revised Statutes, sections 44-4047 through 44-4067. When we're dealing with an insurer, typically our authority to produce documents is found or located primarily in the Examination Act, which is Nebraska Revised Statutes, section 44-5901 et sec. Now, that is what we do to address fraud once it is received or reviewed by the department as a complaint. Now, I know many of you may have a question about what the company's role is in this. What can a company do to minimize their risk or make sure their own policyholders are protected? Now, we find that a lot of these things can be headed off by talking about the mandatory reporting requirements. This will be found in section 44-393. And in short, it states that every insurance company, agent, solicitor, or broker, and every person or party knowing a violation of any of the provisions of this chapter, and that refers to chapter 44, is required to promptly report the facts and circumstances pertaining thereto to the Department of Insurance, which reports and the name of the information may be held confidential by the department, its officers, assistants, and employees, and not to be made public. Now, when we're talking about mandatory reporting, I do also want to bring up the immunity statutes that really attach there too. Now, this is found in section 44-6605, which states that any person or entity, including the department, an insurer, or a person employed by or authorized by an insurer whose activities include the investigation of or reporting of suspected insurance fraud, acting without malice, and that's really the important part. If the company is acting without malice, they will be able to afford themselves of this immunity statute. So acting without malice, fraudulent intent, or bad faith shall be immune from civil liability for furnishing any information related to suspected insurance acts to, and there are a number of people you can report this information to. First, we have the director or his or her agents or employees, with law enforcement officials or their agents or employees, Nebraska Workers' Compensation Court or its agents or employees, persons or entities subject to Chapter 44 or their agents or employees, or the National Association of Insurance Commissioners, the NAIC, or any organization established to detect and prevent fraudulent insurance acts, or its agents, employees, and or designees. Now, one specific act, apart from reporting, that companies can really do to mitigate the risk of fraud is adopt their own anti-fraud policies. And I do want to talk briefly about what those are. Now, anti-fraud policies outline specific procedures appropriate to the lines of insurance the carrier writes in Nebraska, with the following suggestions at a minimum. And I do want to note that this is purely the minimum. Anyone implementing or adopting these policies or policies like this is free to go above and beyond should they wish, but this is the minimum that we really require. Preventing, detecting, and investigating all forms of insurance fraud, covering insurance that the carrier is authorized to write in Nebraska, including but not limited to fraud involving the carrier's employees or agents, claims fraud, and security of the carrier's data processing systems. Now, educating appropriate employees on fraud prevention and detection. We have the Nebraska Mandatory Fraud Reporting Statute, 44-393, and the carrier's anti-fraud policy. We also require that the policyholders are informed about insurance fraud and how to prevent it. We find a lot of these complaints can really be headed off in the short term quickly if the policyholders or consumers feel free to report anything that they suspect might be fraudulent or any issue that they might have with their own policies. We also require the encouraging of the reporting of suspected incidents of insurance fraud to the Insurance Fraud Prevention Division of the Nebraska Department of Insurance. We encourage the legal pursuit of restitution for financial loss caused by insurance fraud where appropriate. We understand that may not be appropriate in every case. And the last thing we require at a minimum is the designation or identification of a person responsible for oversight and implementation of the carrier's anti-fraud policy. Now, I do want to go ahead and talk a little bit more about the insurer reporting requirements before we move on, specifically talking about situations dealing with agents who may engage in conduct that would see a risk to their license. So this will be found in 44-4062 sub 1. If an insurer terminates an agent's employment contract, or other business relationship because of conduct described in section 44-4059, an insurer must notify the department within 30 days of the effective date of the termination. Also, if the insurer knows that a court, government body, or self-regulatory organization has ruled that one of its producers engaged in such conduct, it must notify the department. Again, that 30-day requirement does apply. This also applies in situations where an agent might choose to quit when they are being fired. Now, the insurer must still notify the department within 30 days, and I've included the statutory reference there. And I also want to point out that the insurers are under a continuing duty to provide any additional reportable information later discovered by the insurer. Now, a couple of reminders to kind of cap things off here. The insurers and their agents are immune from civil liability, except in the case of actual malice, for any statement or information provided to the department under those sections. Generally, that's found in section 44-40627 sub A. Now, any record, statement, or other materials that's provided to the department through this manner are not public records and are explicitly confidential pursuant to 44-40628. Now, there is an exception to all of these. When criminal charges are filed, the documents may be used as court exhibits through the trial process or the discovery process attached thereto. Okay, so we've kind of covered all of the authority, the reporting requirements, the civil immunity. We are going to talk about some real life examples today. Eventually, we will jump into that. I really do want to discuss how the department enforces both the acts of individuals that impact their licensure and how those same acts may rise to the level of criminal prosecution. Now, keep in mind, there are two different standards when we are, I'm going to use quote unquote prosecuting cases. The legal division of the department will take administrative actions against individuals who hold licensure with us or should hold licensure with us to either warn, fine, suspend, or revoke the license in question. Now, the fraud division makes criminal referrals for prosecution, usually to local county attorneys. Now, in some instances, there are cross cases. Our first example case today is going to illustrate quickly the difference between a fraud case versus an administrative action. Now, this case that we've handled quite recently, we'll address it as in the matter of LM. So we had a resident Nebraska insurance producer whom we received a complaint about, alleging that they had forged a signature of a consumer, taken some premium payment, and actually not submitted any policy form or issued any policy for that consumer. This agent was contacted and ended up admitting that she had forged about 20 signatures or signatures for 20 consumers, specifically on electronic funds transfer authorizations, that she had allowed a consumer's policy to lapse due to failure to upload documentation required by the insurer. And that she eventually attempted to, once she realized what had happened and that the policies weren't issued, she realized she had forgotten to instate them. She tried to pay reinstatement fees out of her own pocket to reinstate the consumer's policy, which had lapsed due to her neglect. Now, she also admitted to similar events occurring with 4 other clients. Now, I do want to just briefly highlight why this was not a criminal investigation. Here, there was no evidence of intent to defraud. Rather, the agent had demonstrated a lack of diligence and competence, which really boiled down to clear violations of section 44-40591 and then sub those 4. I'm not going to read through all of those. The presentation will be provided or made available to those requesting it after today's presentation. But that's really what it came down to, is that the evidence of the intent to defraud was not there. Now, I do want to talk specifically about 40591G. This is the Unfair Trade Practices statute. So why did we select that here? Now, unfair trade practices, which are separate, although can be commingled with the enumerated fraud statutes or fraudulent insurance acts defined in the chapter. This includes making false statements or representations on or relative to an application for a policy for the purpose of obtaining a fee. Now, falsifying the EFT documents absolutely constitutes making a false representation relative to an application for a policy. But if we're going to delve into the gray zone a bit, paying money out of one's own pocket to reinstate a policy rather than with the insured's funds, it could be fraud, but it's much more of a gray zone. Now, in the interest of time here, I do want to move past this example. I think we've illustrated the differences between the administrative action and fraud. And I'm going to let Kimberly kind of take it away and talk about some cases that she's seen in her work with the department.
My first example is going to be an example of a claims employee committing fraud. And This example is going to show some potential communication obstacles that occurred when an insurer did not fully understand the compliance requirements noted in Nebraska Statute 44-393 concerning insurance law violations. So initially pursuant to the mandatory reporting statute, the carrier reported several instances of claims fraud that they had discovered and denied as a result of a random claims audit. The carrier was contacted for some more information, and they revealed at that time that the fraud was perpetrated by a claims employee during her normal scheduled shift, and that after an internal investigation, the employee was terminated. An immunity letter was sent to the insurer requesting the associated claim files and the internal investigation records. The company immediately provided the claim records. However, the internal investigation records were not provided. Upon review of the claim files, it was discovered that the employee had accessed 8 customer policies and had added an electronic funds transfer account and had changed the customer's contact information. This was then followed by multiple claims being filed against the policies. In total, 63 claims were made over a 20-day period, and the proceeds of 57 of those were direct deposited into an account under the control of the employee. Sufficient evidence was gathered for prosecution, and the employee currently has an outstanding felony warrant for insurance fraud. Some key points of this case were that when interviewed, the employee stated that during her training, the instructor had them access live policy profiles to learn how to assist their customer with policies. During that time, the employee noted several policies that had been enforced for over a decade and had never had wellness claims filed against them. She admitted that she devised the plan to file false claims during her training period using the policies that she had found during her training exercises. And this fraud scheme began the first day she started working on the claims floor and continued for 20 working days, even through the internal investigation up until the day she was fired. Another key point was that although the insured complied with the fraud reporting, they considered the employee's conduct an HR issue. Therefore, they did not mention the employee's status on the fraud referral, and then also access to that internal investigation records and the employee interviews were delayed until their legal department reviewed the relative laws. But in the end, the case resulted in healthy dialogue about the Nebraska insurance codes, including the immunity, mandatory reporting statutes, and their continued cooperation requirements.
So at this point, we want to give you guys the opportunity to ask any questions you may have about the presentation thus far, or specifically about this case here. And I believe we do have some questions. This is from the previous case?
Yes.
Okay, I believe we have one. Okay, so the question is, would you not consider the false signature as an intent to defraud the insurer into believing it is a valid application? Thank you for that question. This deals with the in the matter of LM. And the difference here, we really have to look at the totality of the situation or the totality of the circumstances when you're evaluating these cases. Yes, putting the false signatures or the forged signatures, that could be considered as an intent to defraud, but taken all together, this was a situation in which the agent fully admitted that she really had no idea how to keep the correct paperwork and was taking on far more business than she could handle. So to answer your question, yes, that could be an indicator for an intent to defraud, but in this case, given all the other factors we've known, it really seemed like it was more of an incompetence issue, or more of an issue where she really let the paperwork or her business get away from her without adequate safeguards to make sure that she was doing what she was supposed to.
And from a fraud perspective, when we were looking at that and doing the interviews of the customers and the agent, the customers believed that they had insurance policies, and so it wasn't like she was taking money from the direct deposits. she was forgetting to have the customer sign the documents that were required. So she had obtained, the customer had given her the information. She failed to have them sign the authorization. So that's where that came into play. So there wasn't really an intent to defraud and keep those proceeds for herself. It was just to cover up her incompetence.
You see we had another hand raised. Do we have another question? Okay, I did see a hand raised. I believe it said Sophia or Sophia. If you have a question, please submit it through the chat and we will be more than happy to take a look at it. So one question I had with this case, now when this employee had inserted her own bank information into all these policies, is that something that could have been covered potentially as a check in a company's anti-fraud policy?
No, that's a common thing that that position that the claim handler had. She was a customer service representative. She was there to help the customer with changes to their policy. So if they were going to make a claim, she would take that initial information. She would add all the information that the customer needed so that the payment would be direct deposited, or they could have a check issued. So she was going through the steps that she was authorized to do. It was just she was adding that information and so that it would be, the funds would go to her. She was changing the contact information so that notifications would not go to the policyholder. And then she was changing it back after the claims were paid.
Now, I know most companies do include some anti-fraud training or some information. Oh, it looks like we have a question in chat.
Are insurers doing business in Nebraska legally obligated to report suspected, in quotation marks, fraud?
Yes, it is suspected fraud. It's even titled a suspected fraud referral. And about 70% of the cases that we get successful prosecution for are attempts. So due to an employee being diligent and catching the fraud, a lot of times the customer will walk away from the claim, and therefore there is no actual loss, but there was an attempt. And so we do take those cases. And so the three types of cases that we really want to see is if it involves an employee of an insurance company, whether that's a licensed agent, a claims person, a staff assistant, we want to know that. And that ethically should always be recorded, whether it's actual, attempt, suspected, anything. If a claim is denied for fraud and misrepresentation, we want to know that. And then also, if an employee, or I'm sorry, if a claim handler, or sorry, an insured or a claimant walks away from a claim once it's went to the special investigation unit, we want to know those as well, because more than likely that person's going to go to another insurance company and try it again. Historically, that's what we see are repeat offenders, and we keep a database. We want to know about those repeat offenders. We don't necessarily open an investigation or get prosecution on every case that we get a referral from, but we do build our database. So those are the three main types of claims that we want to know about.
Okay. I think we have time for one more quick question.
Okay. Does a referral of a suspected insurance fraud to the NAIC online fraud reporting system suffice to be a complaint with reporting?
Absolutely. Absolutely. And we review all of those referrals and enter them into our database, and you will always get a letter on the disposition of that referral.
All right, thank you all for your questions. We are going to move on to the next case now. This is going to be, we're just going to style this the case of Dr. Z. Kimberly, go ahead.
Okay. This is an example of an organized crime case, and it's a good example of the law enforcement cooperation that we do within our division. when our division doesn't have jurisdiction. So in 2015, we received a suspected fraud referral from a third-party vendor who handles claims for a self-insured company. They reported that they noticed a spike in healthcare activity in one of their quarterly reports. And the increase involved claims filed by a new clinic where within a single quarter, over 1,000 employee claims were made, with $3.1 million in services being billed. Some of the key indicators that were recognized was that there was uniformity in the CPT codes used, along with uniformity in the treatment plans and therapy notes when the company requested them. The provider maintained clinics and a residence in Florida, but they had recently reinstated a Nebraska medical license and filed for articles of incorporation.
I did see another hand raised. I believe it said Petra. If you have a question, please submit it through the chat. We're more than happy to take a look at it. Thank you.
Yep. And then we went out and interviewed some of the employees, and several of the employees revealed that they were recruited by a fellow employee and that they had been paid a small sum for their policy information and additional funds as a recruiting fee for each person they brought to the recruiter. Some key concerns in this case were that, unfortunately, due to it being a self-insured plan, this case had to be turned over to a federal agency for investigation and for potential prosecution. And eventually, the case was turned over to the FBI out of Florida because they also were able to build a case against this doctor, and they were able to successfully prosecute both the doctor and her associate. Both of them received a 70-month federal prison sentence, along with 3 years probation and ordered restitution of about $414,000.
Questions submitted at this point. Okay, so at this point, we're going to open it up just for a couple questions from you all about this case, the case of Dr. Z. One question I had, obviously, this case deals with a high volume of claims in a very short period of time. Would you consider that a red flag? And if so, what other red flags do you kind of look for when a complaint is received?
On the healthcare stuff, there's a lot of different things that the insurance companies look for. And to kind of backtrack a little bit, the majority of our cases that we open come from referrals from insurance companies. So they've already done their internal investigation. And some of the stuff that the red flags that they find are going to be frequency in or an outlier in the certain CPT code. Depending on the company, they may be a frequent biller, you know, but this one in particular, it was that they were new to Nebraska. All of their client base was from a couple meatpacking plants in the area. Other things that we look for is the companies look for is going to be unbundling of certain procedures. So which that in of itself is more of a civil fraud versus a criminal fraud. But it's things that come up on their radar. So the healthcare frauds are incredibly difficult to work just because there are civil remedies for how to handle billing issues.
Questions being submitted this time? Okay, and we will have a general Q&A at the end of today's presentation. So if you didn't get a chance to type out your question or get it submitted, please feel free to resubmit it at the final Q&A, and we would be more than happy to take a look at it. So we have looked at a claims employee case. Now we've looked at a doctor, a billing, or a claims case. It looks like we do have one question coming through.
Apologies if this was touching. Is there a threshold or criteria that has been met before a case will be opened up when it is referred to mid?
So when we have no threshold, we do have a statute of limitations though. So, and that goes off of the established dollar exposure. So if we cannot identify a potential dollar loss or an actual dollar loss, then we can't do anything with it. So if a claim doesn't proceed or progress long enough where we can identify that dollar amount, we can't use reserves, then we will open it. But with anything that's under $1,500 for an exposure, we have an 18-month statute of limitations. Anything over that is a felony. And so then we go on to a 3-year statute of limitations from the occurrence of the fraud.
So thank you for that question. We are going to move on to another case study dealing with specifically an agent, just so we can kind of get a view of what cases like that might look like.
This case we'll refer to as an agent case with RS. This one was rather satisfying to work in the end, just because of who he targeted. So it's a good example of other ways that we receive tips. The Insurance Fraud Prevention Division received information from suspicious bank activity on the personal account of a licensed insurance agent. It appeared that several personal checks had been issued to the account holder with policy numbers written in the memo section. However, when looking at the account, all other account activity appeared to be for personal expenditures. Bank records were subpoenaed for a 2-year period, and it was discovered that a little over $200,000 from 6 accounts had been deposited. Those 6 payees were interviewed and all believed that their payments were for purchase of annuity investments. The insurers, when we contacted them, confirmed that the customer's money was not used for their benefit and that there were no current policies. Substantial evidence was used to support multiple Class 3 felonies in 2 separate counties, resulting in several felony convictions with a sentence of 6 to 20 years incarceration with an additional 60 months probation. Some of the key points of this case were that the victims were all elderly widows and they were befriended by the agent. And the victims were, when we first contacted them, they were so close to this person that they initially were not cooperative. They felt that this was like the son that they never had. He brought his kids over, fixed light bulbs for them, all sorts of things unrelated to their professional relationship with them. And they would not cooperate until we presented them with the physical evidence that they had been, that their money had been stolen. The agent made unsolicited visits to the client's residence, and it always included urgent investment opportunities. And unfortunately, none of the victims are likely to recover even their initial investment. And even after we initially interviewed the agent, he continued to defraud his clients, soliciting money from some of his clients to try and attempt to pay back a selected few.
All right, so at this point, we're going to open it up if there's any general questions about this agent fraud question. So to get it kicked off, Kimberly, I assume that an investigation can kind of be, I guess, slowed down in a situation where a claimant or a complainant believes they have such a personal relationship with the agent. What kind of impacts do you see from that situation on your work, and how do you kind of respond to that in files that involve such a relationship?
You have to use a lot of patience and a lot of compassion. I had one of the victims on this. She had one child that lived out of state and she never got to see him. And so she was very fond of this agent. And when I initially told her, she went completely white and I had to retrieve her medication. I honestly thought she was going to have a heart attack on me. I mean, it scared the living daylights out of me. She eventually, her medicine kicked in, went through all of the facts, and the evidence that I had, and I was really worried about the quality of a witness that she would be. And boy, she ended up just a complete tiger. She was so mad and was very, very helpful. And eventually all of them cooperated. Some of them a little bit more reluctantly than others, but sometimes they're embarrassed. Their family members to know. So you got to use a lot of compassion. These are intelligent people. Anybody can be defrauded. Doesn't have to do with their age. He may have targeted them because of their age, but they were not defrauded because of their age. And that is an important factor. So one of the questions was, this one here, was that situation reported by a banking institution? We receive our referrals from a lot of different sources, and there are some networks in place that look at money laundering issues. And so we receive referrals from that entity as well.
I don't see any further questions, so we're going to move on to the last case here today. We refer to this as the sneakers claim or passing the buck.
Yeah, this was a very interesting one. And this case highlights what unfortunately we see in some claim fraud cases. So in compliance with the mandatory reporting, an insurer submitted a suspected fraud referral after their claims handler identified several potential fraud indicators that remained unresolved after the insurer walked away from the claim. The claim file was requested, and upon review, it was discovered that the insured had recently filed another theft claim with a separate insurer. Those records were requested, and when we reviewed those, the facts were very similar. In both cases, the theft involved a large shoe collection, and the same potential fraud indicators were identified in both claims and noted in both claims. Those fraud indicators were that this was a new policy with no prior coverage or claims identified on the application. The insured had recently been released from a long-term incarceration sentence. A large quantity of newly purchased items were claimed with no receipts or proof of purchase. The insured had a history of financial liens and bankruptcies, and there were no witnesses or police report filed. There was one major difference in this one. In the earlier claim, the claim handler had identified and noted the potential fraud indicators, but instead of asking the additional questions to resolve the indicators or ask for supporting documentation, the decision was made by management to just pay the claim. This resulted in over $45,000 being paid out to the insured. Shortly after that payment was issued, the policy was canceled and the remaining premium was refunded. So essentially, this individual got $45,000 and paid for 1 month's worth of a renter's policy, which was probably about 20 bucks. Within a few short months of the first claim, the insured purchased another renter's policy with a different carrier, and again, they suffered a theft loss. This time, they had over $70,000 worth of a shoe collection. However, in this claim, additional documentation was requested to support the loss, and the insured chose to close his claim without payment being issued. He again canceled the policy and was refunded the remaining premium. Key concerns on this case were that there were no efforts to resolve identified and noted potential fraud indicators on the first one. When the issue was brought to management and the decision was made to pay the claim without further follow-up, even though the policy language required cooperation with providing support for the loss. Finally, that when the insured was successful on the first fraud scheme, he went even bigger with the next insurer. And we see that all the time. And that is why we want even those claims where they walk away, we want to know about that because that's going to build our case. Because if that second insurance company hadn't asked the questions and done their own follow-up on claims history, we may never have known about the extent. And people talk, groups talk. We'll have a rash of, like in this case, we had a huge rash of renter claims come in all at once. And almost without exception, all of them were recently released from the prison system.
All right, so at this point, I know we're coming up on about 10 minutes remaining here, so I'm gonna open up the Q&A session. Of course, we will take questions regarding the sneaker claim, as well as any other questions that you might have or didn't get an opportunity to put into chat earlier on or dealing with any other cases. I'll go ahead and get us moving here as best I can. If you have any questions, please, submit them through the chat. Now, Kimberly, in this case, the sneakers claim case, I understand that there really wasn't a lot of documentation of this sneaker collection. Now, I assume those are the kind of things that an anti-fraud policy with a carrier or an insurer would help prevent. Is my understanding of that correct?
Yes, yep. And just asking the question, prior to being in this position, I worked for a national carrier in their SIU, and their approach to fraud investigation is very much customer service related. So we had to confront somebody with the fact that they may be potentially committing fraud, and if they're able to explain it, still keep them as a customer. So it can be done tactfully, especially when you have a policy in place that you can fall back on and say, look, this is just a requirement, And we would think outside the box. If they didn't have a receipt, do you have pictures? It doesn't have to be just one way. Not everybody, I don't keep receipts on everything. But if there's other things that we can do to help the person document their loss, then we were going to do it. And usually, like in this case, if they spent $45,000, $70,000 on a sneaker collection, they're going to be proud of it. And they're going to have some way of being able to show how cool their collection was. Even if it's somebody coming over and seeing where the big empty space was that would hold that many shoes.
Now, I haven't seen any questions come through chat about that case specifically. At this point, you can ask questions about anything in the presentation that you'd like discussed or potentially answered today. One question I want to bring up, I know that we've really only touched the tip of the iceberg here. Are there any other tips that you would like to share today, Kimberly, about how companies or agents or even the policyholders can do to prevent fraud like we talked about today?
My biggest tip is just ask the question. Just ask the question. You would be amazed on what people will answer if you just ask them the question. And then another thing that we really struggle with, especially in today's electronic age, is one of the elements that we have to prove for criminal insurance fraud is that we have to establish what's considered venue. Where did the crime occur? Because that's going to tell us what county we can prosecute that case in. And so, when taking a recorded interview, just asking the person, where are you right now? If it's an initial loss and it's a vehicle claim, you can ask them, where are you right now? I just want to make sure that you're in a safe location. If you're driving, can you please pull over? Are you at home right now? Are you, and that would really open the door for us to be able to get all those elements met. Because we have a lot of cases that are strong, good cases, but everything's been done electronically or over the phone, and we can't establish venue.
I haven't seen any additional questions come through yet. Now, since we're talking about basically the iceberg that is fraud investigation here, is there any other way that someone could potentially attend something to learn more about Tell me more about fraud.
Yes, actually, we do an annual insurance fraud conference. It's a 2-day conference. The first day is for the insurance industry or anybody interested in insurance fraud that's part of the industry. So it doesn't have to just be the claims people. We always get CLE hours approved through the bar. This year we got 6.5 hours approved. One of those hours was an ethics, so we always try and get that. And then that also applies for the agents. We get that approved. And then also for Sophie, that gets approved that way. Unfortunately, this year's conference is full, but we always try and do it the first Wednesday in August. So you can email me if you want to be put on a list for next year. It's usually $50 for the conference fee. That includes lunch and entrance into the, we usually try and do it at a state park facility in their lodge, and that'll include your entrance fee. And we've got great speakers. It's a really good conference, great way to network with other people.
So we've reached kind of the end of our presentation for today. If you do have any other questions, please feel free to submit them directly to me. My email address is on screen here. My phone number is also there. Please feel free, if you have any questions, please feel free to call me. Or if you want to talk to the actual expert, Kimberly, call me and I'm more than happy to provide her email address, which was in the prior slide as well. So today we're going to go ahead and wrap up. We do have a quick satisfaction survey that I'm going to be putting up now. Should be open. Now, feel free to answer there. If you have a topic that you'd like to discuss in a future presentation, please email that idea to our public information officer, AJ Rosca. Her email address is on screen now, and I will leave it up. Other than that, I want to thank you all for joining us here today. Look forward to any dialogue we can establish moving forward, or any questions you might have. Thank you again for coming. And I will leave the satisfaction survey up for just a couple minutes. Again, thank you all again.